Welcome back to my morning report analysis videos with me, Rich Market Analyst at Hantec Markets. On Tuesday the 15th of May, let's have a look at euro dollar, which has sort of lost momentum in that rally, didn't it? We've seen US Treasury yields picking up, yield differentials are key driver of forex markets at the moment in my belief, and that subsequently we're seeing euro dollar being pulled back lower. Look at that yesterday, closing at the low of the day. A shooting star candle doesn't really bode especially well for the near term, and you can see that the impact this is having on momentum indicators, with those sort of improving momentum indicators that we had seen yesterday just beginning to roll back over again. RSI especially rolling over, and on the hourly chart you can see that it's broken that recovery uptrend, and what had looked like positive momentum configuration is now sort of becoming less so, with the MACD lines below neutral, the RSI sort of under 40. And this 1940, look at that old resistance, became supportive and has become resistance again. So that is your initial level to look out for there, and it's sort of rolling under there. Interestingly also that 120 big figure, I spoke about that yesterday being psychological, but also a level that has been sort of tested previously, and acted as a basis of resistance, sort of came back in again yesterday. So that is a level that the market has had a look at, and obviously didn't fancy. So euro dollar sort of failing in its recovery and rolling back over, and again trading lower marginally today, 7, 8, 10 pips or so down on the day. Yeah, doesn't look especially great for the recovery suddenly. So that 120 figure level is clearly now the level to watch on the upside, as this recovery just loses its way again, and as I said, sort of breaking that recovery uptrend doesn't really help it, and you see all these moving averages. 21 hour moving average sort of rolling over, 55 hour moving average, which has been a pretty decent basis actually for this market, as resistance and then support, and that's rolling over at 1445 now. So yeah, it looks as though it's back under pressure a little bit to the downside. Maybe you could start to see little rallies being sold into rather than the corrections being bought into. It seems to be sort of flipping now back to the negative side once more. So I wish you good luck in your trading, and I'll speak to you later.